Good morning, traders. This is Matthew GS. We are episode 37 of the 51362 EMA Strategy. It's currently 7th of June 2025 and it's 10:21 a.m. in the UK. Welcome along to this latest episode. If you're new to the channel, please do subscribe, hit that notification bell whenever we upload new videos. So before we dive in to this latest video, we do have a Telegram channel, link in the description to join that. Our broker is FP Markets and we get to use any lot size in any market. I am affiliated with TradingView. We get 20 alerts with the basic package. Again, got affiliate link if you wanted to join with TradingView. I do believe that the alerts with TradingView are the best in the industry. And finally, at the end of the video, we will be going over the news for the week. So in this latest stream, I'm going to go over the Holy Grail of trading, right? And I think I've probably touched base on this subject before, but Fibonacci, the 61.8, is potentially the Holy Grail of trading, not just Forex, crypto, but also stocks. And the reason why that is because it's a mathematical thing that happens over and over again, and it's in trading, it's potentially the Holy Grail. And the reason why it's potentially the Holy Grail is because price always, well, not always, but most of the time it comes to that level like a magnet consistently over time. And if you're aware of that, you can take advantage of that, right, to trade it. So currently got two screens. If you see me looking left to right, it's because of that. And just going to load up the screens, so hope everyone can see this. I'm on camera today. Sometimes I'm going to be on camera, sometimes I'm not, but let's start off with US 30. So just a couple of updates for my trading strategy and where I am at the moment. I have moved on to the 1 hour time frame. I was for many months on the 4 hour time frame, and although I still will be looking at the 4 hour time frame, I just see that there's a lot more opportunities on the 1 hour time frame. And sometimes, you know, the 4 hour time frame, we do have to wait a very, very long time for the setups to take play and set up and all that good stuff. And we normally want to look for like a 1 to 3 or 1 to 2 trade, and it doesn't always hit that 1 to 2 or 1 to 3. However, on the smaller time frames like the 1 hour, you can hit those 1 to 2s, 1 to 3s more quicker, more consistently, and we get to use tighter stop losses, which means we get to use bigger lot sizes, right? So I was like, do you know what, I'm gonna just go to the 1 hour time frame, observe, take a few trades this week and see what is cooking. And I haven't looked at US 30 for a long time, but there's been some really good opportunities with US 30 on the 1 hour time frame. So let's dive in and see why this 61.8, the 61.8 is, we used it, so rounded up, right, it's 62. So the 62 EMA is the purple EMA, right? And price just seems to always come towards it like a magnet, and some of the time it does reverse. Like, for example, this was a beautiful setup on the Friday. So we've had a break of the 62 EMA. All three EMAs have crossed over. The 513 and the 62 EMA has crossed over. So potentially only really looking for buyers now. And then what's happened is we've got the pullback not only into the 62 EMA, but it's also tapped this very small institutional candle down here. If you did take a buy limit on this, I don't know why it's just done that, because if you did take a buy limit on this and you had your stop loss just on this line here, you would have got stopped out. So it's probably good practice to have your stop loss just below the body of this candle so you don't get stopped out. But I mean, if you did get stopped out, you would have been notified, and it's happened to me a few times. And then when I see that price is like reversing like this, then you can get in for a buy if you did get stopped out. But nevertheless, say like we did have the stop loss just like that, and then TP1 was this high here or this high here. That's a 1 to 7 trade right there. So that was beautiful. And if you did hold it for even longer, that's a 1 to 15, because the stop loss is so tight on the 1 hour time frame. But if it was on the 4 hour time frame, the stop loss is obviously going to be a lot bigger. So that was a really good opportunity there for the 62 EMA. We're just going to be hunting previous 62 EMA trades and see if we could have got in. So on Thursday, we're high here, prices slammed down onto the 62 EMA. Can you see how it just could not break at all? So this is an opportunity to buy on the 62 EMA. Let's say you bought there and your stop loss is just below the 62 EMA there. You could have target this high here, and that's nearly a 1 to 14 trade there. Can you see how this is whipped up? It's taken out these guys here, and then it's slammed back down. And if you've watched my other video, we can also set a buy stop. So we can set a buy stop, say here. So the alert would have gone off, and then you've gone, okay, so if price does reverse and it goes past this entry level here, I'm in a buy stop, and then you could have done the same thing there. Okay, that would have been a 1 to 4 trade. So that was another good opportunity on the 62 EMA on the previous day. No trades on the Wednesday, and really I'm going to be looking at only for the most part taking the 62 EMA trades. So on Wednesday there was no trade. On Tuesday we slammed through the 62 EMA. We did come up to the 62 EMA here, and then if you were looking for sells here, could have got stopped out by trying to take this further down there. But anyways, if you see that, okay, it has broken the 62 EMA, this wick here didn't quite reach the 62 EMA. But again, if you are observant, sometimes it's best to just be observant on the charts. You could have gone, do you know what, this is looking like it's going to be bullish, so we're above the 62 EMA, and then caught this trade here. But the previous day it did actually mitigate their position from this institutional candle down here. So this candle here, it's captured liquidity. Can you see how this is wicked down? It's taken out these guys, this guy, didn't quite reach this guy here. So it's basically taken out all these guys here. We've shot up. So this is now our point of interest, right? Let's move this down here. So this is our point of interest. So we could have set a buy stop, a buy limit on this candle here. Stop loss can just be below this body. I mean, to play it safer, yes, you can have a wider stop, but that means that your lot size is going to be decreased. And this was a beautiful trade that eventually went for nearly a 1 to 6. Okay, so there's multiple opportunities this week on the 1 hour time frame, mainly just focusing on the 62 EMA. The most high entries for this strategy is the institutional candle and also the 62 EMA. There's lots of variables with trading and this strategy. Yes, you have to know higher highs and higher lows and lower highs and lower lows. And also you've got to know what direction price is potentially going in. If you've been watching my previous videos, there is imbalance. There's a lot to take in. But if you just focus on the 62 EMA and these institutional candles, then you will eliminate a lot of the noise. Let's see if there was any trades from the previous week. So on the Monday, we did slam up to the 62 EMA. I think it did reject like this, but then it carried on going higher. So we broke above it. We did get a retest to the 62 EMA, so we could have bought there. We didn't quite get up to this level, and then price did come back down to the 62 EMA. There was a liquidity grab. It took out all these guys here, and when this happens, I have said before, it's not a good idea to buy the liquidity grabs, because we kind of want to set our risk in advance. However, you can say, right, if price reaches the 62 EMA, say there, I'm going to set a buy stop, and then my stop loss can be just below the 62 EMA. And when this is doing this, right, the alert would have gone off. You would have got triggered in here, and then price has come up. It's continued higher, and this eventually went for a 1 to 10 trade. So this is how you can trade those kind of scenarios, right? Then price did very nearly come into the 62 EMA here, but it didn't. It broke the 62 EMA, and then we could have gone, right, if this goes higher again, we can set a buy stop on this candle here, the last candle that's gone through the 62 EMA. Stop loss below the 62 EMA, and that actually went for a 1 to 6 trade. So that was pretty much Wednesday and the Thursday. And then we did have the break below. We have gone and hit the 62 EMA here as well. So we could have had a short position there. Stop loss just above the higher there. And this ended up taking this low out there. So that's a 1 to 7. So you can see how we can use tighter stop losses, which increases the lot size. And this small movement here was a 1 to 7 trade. When there's more opportunities, it means you have to be more active in the market and have your entries and exits set up. You can't buy and hold for as long as possible, because price is always going to reverse at some point. So there's been some good opportunities on the 62 EMA on US 30. I'm not taking the 13 EMA trades for a while, and I have updated my alerts. So if you see my alerts now, this is what they're looking like. I've got the Bitcoin 62 EMA on the 1 hour time frame, also on the 4 hour time frame. I've got GU on the 4 hour time frame. I do need to add GU on the 1 hour time frame. Let's do that now. I'll show you how to do that again as a refresher, right? So make sure in the 1 hour time frame, we come over here onto our 513.62 clouds. We come here, the three little dots, we go add an alert. Then we want to have the condition, because this is actually recently been updated, so it'd be good to show you guys. So condition, we want this to be priced. So this is GBPUSD, where the price is currently and where it's going. And we're saying, okay, if GBPUSD crosses our indicator on the long EMA, which is the 61.8, the 62 EMA, that golden nugget, the holy grail of trading, and we want to choose once per bar. So that means that whenever the trade crosses, you will get notified. If it's per bar close, that means you won't get notified until the candle is actually closed. And 1 per minute means that every minute you will get notified if it's, you know, hitting this criteria. And only once means that as soon as this criteria is met, the alert is finished after that. So once per bar is best. Expiry with the basic package, do you get 2 months? So make sure you choose the latest date available. I mean, yes, you can choose there, but yeah, let's just choose the 6th of August. Please also be aware that once it hits the 6th of August, it does not auto renew. You have to manually come in and then rechange this for another 2 months. It's a little bit annoying, but it is what it is. If you want this to never expire and consistently do that, there is higher packages that you can set up, but that costs more money for that privilege. Then message, you can put GBP USD like that if you want, or if you want to shorten it, you can put GU crossing 62 EMA and then put the time frame if you want. I'm also looking at the 4 hour time frame as well, so I put 4 hour, but if you're only looking at the 1 hour, you don't have to put 1 hour, but this is what I do. Oh, I just made a mistake there. GU crossing 62 EMA 1 hour. I copy this and then I paste it in here as well, like that. Notification, so I get notified in the app and I get the notification here, which comes on the bottom right. You can get an email if you want, and you can have sounds and all that good stuff, but this is what I do. And then I go create, come back to here. You will now see that I've got the GU crossing the 62 EMA on the 1 hour, and obviously I've got it on the 4 hour. US 30, got it on the 1 hour and a 4 hour. And also I've got the US 30 crossing on the daily, because the daily time frame is also important. I thought might as well make use of the 20 alerts, right? And I've also got it on gold, and I need to set gold for the 1 hour as well. So I think having it just on the 62, I always like to improve and try different things. I think that the 62 or the 61.8 is the holy grail of trading, and just have alerts set up for those areas, right? And only trade those criteria when it's met. Before I forget as well, there is something called pound cost averaging or dollar cost averaging if you are in America. And what this means is instead of just having one fixed amount of, say, £1,000 or $1,000, every month you top up your investment or your trading account with more money. So not only are you building your account up through trading, you're also topping this up through other sources, whether it be a job or a business or investments from elsewhere, which means that on a consistent basis you keep topping up your trading account, right? And then that means that you get to use bigger lot sizes, which means bigger returns, right? So if you starting with £500 or £1,000 and then that's it, you never top up that account again, it's going to take forever to build up to, a bigger trading account. So the smart thing is to keep topping this up with funds, right? So every month for me, I am topping up my trading account. My goal is to get to say 5k or 10k of my own personal money, right? And then that means that I get to use bigger lot sizes and then which means I get bigger returns. So when I'm trading these trades, I'm making a lot more money than just if I had stuck to a smaller account and just left it as that. So just wanted to give you an update that I am doing this on a month by month basis, and it will really help with your trading having a bigger account. Now, there has been some other opportunities on the 1 hour time frame on the 62 EMA. Even on Thursday, we've been below the 62 EMA for a while, but look at this liquidity grab here. And also, not only was it a liquidity grab, but it actually come to the this institutional candle here. Can you see how this captured liquidity and then we dropped? We did come back up on the Wednesday actually to the 62 EMA here. So we could have had a sell limit there, and this ended up going for nearly a 1 to 3 trade here. And then price has actually come back up because it likes to do this a couple of times actually. There's potentially on the smaller time frames an institutional candle that had not been mitigated, so they've come back up, right? This is their excuse to do this. You think you're going there. Yes, you could have caught this move down there, but the big move happened through them building up liquidity, and everyone's thinking, yeah, we're gonna go, and then this just shoots back up. It mitigates their position here. We did get the 62 EMA alert go off here on the 1 hour time frame, and then prices decided to drop here. So what we could have done is set up a sell stop on, say, this candle here, and then caught this massive move down here, which is pretty insane, nearly a 1 to 10 trade that was, and that was all on the 62 EMA on the last couple of days. Then we have had this massive move up here. Yes, we could have bought low, but like I mentioned, we're only focusing on the 62 EMA. However, it's a shame that it was Friday, and I know Bitcoin goes over the weekend. Our broker does stop over the weekend, but we did get the break of the 62 EMA and the alert went off. Okay, we've had all 3 EMAs crossover here, literally just before the the market was the closing, or the broker was closing, should I say. But if we look at the live data now for Bitcoin, we did take off slightly, but however, we did get this liquidity grab down here, so we would have got taken out if we did take this trade. However, from the liquidity grab and another 62 EMA alert, we did go higher. Didn't quite break this high here, so potentially still win the trade. But again, this is another good opportunity to take advantage of. And we do have to be a bit patient with 62 EMA. But as you can see, there has been some really good opportunities for it. We slammed into the 62 EMA here, and it's actually come up to this. I mean, this is an insane trade, really, think about it, because we had this institutional candle here, this area here. We've pulled away. We are on the, sorry, we are below the 62 EMA. We could have set a sell limit on this area here, and stop loss just below, above the higher there, or 62 EMA. And then, geez, imagine catching this trade here. Nearly a one, it's pretty much a 1 to 15 trade. Yeah, crazy. So yeah, moving forward, looking to just trade the 62 EMA trades, and always remember, look for the institutional candle. Price is probably going to the institutional candle around the 62 EMA. So don't just trade the 62 EMA. You do have to be aware of other variables as well. Institutional candles, are we below the 62 EMA? Are we above it? Are we having lower lows and lower highs, higher highs and higher lows, right? Where's the targets? Where's the imbalance? And yeah, it will all come together. Okay, I'm not really going to look at any other trades, but yeah, moving forward for a little while, we will be looking at the 62 EMA on the 1 hour time frame, and just finishing up now to see what's going on next week. Monday, only looking for red folder news, nothing on the Monday. Tuesday, there's red folder on GBP. Wednesday, there's US red folder news, so it's a busy day on Wednesday. Thursday, there's a couple red folder news, again US dollar on the Thursday. And then Fridays, yeah, not much at all, so it should be very quiet on the Friday. Appreciate everyone jumping on. Have a great weekend, and I'll see you in the next one. Bye.